Hello again, everyone. Welcome to the Options Mentor. Well, we made it through the first quarter of the year with a little bit of an uptrend, of course, in the SPX. And now we head into that second quarter, which, could have some fireworks along the way. And of course, we have a presidential election coming later in the year. So we will definitely see some volatility around that time. And I suspect that rate cuts because of that presidential election will probably be coming probably in June or something. They generally do try to put some window dressing on the economy for the current president. So I wouldn't be surprised if they cut rates, even if it's irresponsible, because inflation's too high to cut rates, but that never stopped the Fed before. So we have to be wary of that and a lot of talk about it. That being said, this coming week, we do have a lot of Fed speak, including including Chairman Powell. Not a general yet, but the Chairman Powell, and also on Friday have non-farm payrolls. But I suspect most of this market attention this week will be on what the Fed speakers, particularly Chairman Powell, have to say. So I have a concept I'm going to cover here for you, a question that I get asked all the time. Let me share my screen here, and we'll just take a quick look at the SPX chart. You can see here we've been this uptrend, and now we're kind of trading in place here a little bit. Now, with tomorrow being the first day of the quarter, you can also expect that there could be a lot of inflows into different funds because they want to say, hey, look, we're in it for this quarter or whatever. So usually the last day of the quarter, first day of the quarter, you can see a lot of movement by big mutual funds. So just keep that in mind. In any trade you put on that's a non-directional trade, like a calendar or a fly, I would probably do later in the session, maybe in the last 2 or 3 hours, just to prevent you from being in something early and then have the market take off all day and put you in a less than enviable position. So I have a couple ideas here. As I said, one question I often get asked is, how do I decide what trade to put on? Well, if you're coming into a trading day, you want to put on a trade. And what I do, and let's say you don't have anything on already, I look at the VIX. And the VIX right now is 1301. Now that's the thing I look for to help me decide what trades I'm going to put on. And just in general, if the VIX is below 14 or 15 and I don't have anything on, I'm thinking about getting a long Vega or long volatility trade on, like a calendar, maybe a diagonal, but most often a calendar. And if the VIX is, say, 15 or above, I'd probably be looking at a butterfly as its short Vega as one of my first go-tos. So if you look at it that way, let's say we go into tomorrow, Monday, and you want to put on a trade. You look at the VIX and it's where it is now, or under 15 at least. What you can do is maybe put on a calendar. Now, this calendar is showing a graph that's not realistic. They're still working on that, apparently, at TD Ameritrade Thinkorswim. The graphs have been showing you up money before you even put the trade on. That would be great if it was true, but it's not, and still will have to be worked on. But the concepts are still the same. I would put on probably a call calendar, maybe a little below where we're trading, because you have a lot of room up here. We'd have to go to all-time highs yet again. You'd even have to adjust the trade or be in any trouble on the upside. And by doing that, it gives you more room on the downside. If you put this on a little below where we're trading, and even on the downside, probably volatility would have gone up, which would help you. So this trade to me looks pretty good here. Now, what I did with this trade is I went out to a week from this Friday. That gives our trade time to work while still affording us the opportunity to repair it if we needed to. If you put the trade on, for instance, for this Friday, and maybe you went 4 days wide, which is what I would be doing here with the VIX. Under 15, I'm probably going to be 4 days wide between the short and the long, that is. But if you look at this here, if you do it for this Friday, it just, for one, doesn't give you as much room. And secondly, if it goes against you, say Wednesday or so, certainly anytime, after Tuesday, you really aren't going to be able to repair it because expiration date's just a couple days away, or maybe even a day away if you wait until Thursday. So why not go out to a week from this Friday, still 4 days wide. So that's selling the 12th, buying the 16th. And then if things go wrong against you, you can still repair it because the trade, you really can be in it. You could be into it even into next week, wouldn't be a problem. Now with this trade, whatever I pay for it, let's just say I paid $520, which is $520 in option language because prices are times 100 because the lots are hundreds of option contracts. So I'd be looking to get around $60 and get out of this trade. And I think you have a decent chance of having that by Friday. If depends on how volatility treats you, how much things move around. But I do like this trade here, and I think it's a reasonable one wherever we may be trading. Now, by tomorrow afternoon, Monday afternoon, we may be trading at 5,300. Well, if that were true, then you'd certainly want to move this calendar up to like 5,180, 5,190. So wherever we're trading is where I would probably put this on a little bit below it. And this would be a trade I do if we have the VIX under 15. Now, if the VIX is over 15, then I might look to do a butterfly. Now, I like to do them 35 days and more, but here's one that'll be around 30 days, 26 days, whatever, tomorrow. And that's a trade I might consider if the VIX was over 15 or over. And with this, I did an asymmetrical butterfly, meaning that one side's closer to the center than the other. So I put this right around what we're trading. You could put a little above, a little below, but here with the market having closed on Thursday at 52.54, I'm modeling this at 52.50. I went up 60 for the top long, down 70 for the bottom long. And as you can see here, I'm down about $40 if we get to the lower break even, and about $70 if we get to the upper. So it's really not big damage in either direction. If you get to either of those edges and you want to repair the trade, you certainly can and stay in it longer. And also, you could, if you want a little more room to the downside, you could go up 65 points, down 70. What's that do for you? Well, on the downside, you'd actually be up money at the lower break even, but you'd be down a little more. Instead of $77, you'd be down about twice that at the upper break even. So it's something to consider. So if you're really wary of the downside, this may be for you. If you're wary of the upside or you just don't have an opinion, then I would probably do the 60 up, 70 down in this case. Now, if the market's totally haywire tomorrow, meaning down a whole bunch, maybe down 70 or 80, have a big gap down, and the volatility really spikes 2 or 3 points, I'd probably wait till Tuesday to do anything. I don't want to wade into that with a huge down move and a big volatility spike. However, if the market would say open up 100 tomorrow and hang around up there, I'm more than willing still to do a calendar with the VIX below. I just wouldn't want to wade into a new trade tomorrow if we have a 2 or 3 point spike up in the VIX, a huge down move, which I consider like, probably 60 points or more down, then you might want to stand aside. All right, so that's what I have for this coming week. A couple of ideas. And like I said, it's a question I get asked a lot. How do I decide? Well, that's how I decide myself often which trade I'm going to put on. As always, I appreciate you guys joining my channel, subscribing. Please remember to do that. Tell your friends. And by now, I'm over at arimer.com. I'm there every day with an opening bell session, reviewing what's going on in the market that day, talking about trades. A couple of days a week, I have a help desk and a trader's lounge where we get even more in depth into trades and trade adjustments. I also have a trade signal service over there. If you want to follow me along on a trade, that's the way to do it. All the information to do that is in the description of this video. You can find everything about me over there, how to get started, being around and hanging out every day with me and a bunch of great traders that are over there. And that site has more than just me as a teacher. There are other teachers on there too. So check it out. but there's some really, really good content. And I try to provide great content over there every day with the stuff that I do. I also just put out a new course, a video course on what I call the all-put flat fly. It's a particular style of asymmetrical butterfly that I developed several years ago. It's a very in-depth course, lasts over an hour and a half, where I get into the nuts and bolts of the trade. If you're interested in that, that's also in the description, how to obtain that. So I appreciate your attention as always, folks, and I will be with you again next week. Have a great week and good luck on all your trades. Bye-bye.